Aloha, mai kako, and welcome to the Better Together podcast by Lōkahi Federal Credit Union, where we strive to uplift our community and create connections one story, one conversation at a time. And my name is Danielle Sanico, and I will be your host for today. Today, we are sitting down with Executive Director of Hawaiʻi Homeownership Center to discuss home buyer readiness. So please welcome Reina Miyamoto.
Thanks for having me.
Thank you. Thank you for coming in and just giving us your expertise on this topic. Can you tell us about yourself and about the organization and what it offers to the community?
Sure. I'm the executive director for the Hawaiʻi Homeownership Center, but I started there as a program manager 19 years ago, and so much has changed actually in the buying process. But, you know, in terms of at the core of educating and getting people ready for homeownership, I think that there's a lot of things that are still relevant from all the way back when I started a long time ago. In terms of the organization, we're really about helping local families get into homeownership. So, you know, can an individual or family consider homeownership, and what's that path? Sometimes they're not necessarily mortgage ready. Sometimes it's mortgage readiness isn't just financial readiness, it's emotional readiness as well too. So we're hoping to provide classes, coaching, and any kind of other supplemental information to help them get into homeownership and be successful long term.
Okay, that's great. Now, what would you say is somebody that qualifies for that type of counseling from you folks?
Actually, anybody thinking about homeownership. And then we've actually even met homeowners that said, I bought a home and I have no idea what happened. I'd like to get educated because I'm going to do it again. Or sometimes people inherit property and they haven't done anything in terms of getting financing or has no preparation for the responsibilities. So I would say anybody that wants education about home ownership in general, whether it's getting into their first home in terms of a purchase or how to be a successful homeowner in whatever way, shape, or form that is, I think that's a good idea.
Oh, that's so great. I just have a couple of questions for you. So many people think that you need to buy a house. What about who isn't home ownership for?
Who isn't home ownership for? I think that for some people, the responsibilities for home ownership isn't right for them. It's like too much. They're not ready for it, either financially or just having the emotional wherewithal, their commitment to wanting to do that. Oftentimes, at least in this current market, owning a home in terms of the mortgage payment will be more expensive than it is to rent. So it really has to be someone that is committed and wants to make that purchase and own their own home. So there is that emotional component. I would say also there's some people that in their careers or they already know that they're short-termers in terms of they're going to be relocating soon. They're not really sure about committing to a place long-term. So it doesn't mean that home ownership isn't an option or shouldn't be considered ever. It just means that perhaps it's not necessarily the best for them at that given time. So I think that everybody needs to take a look at their personal wants and needs, and then also fast forwarding the tape to make sure that buying a home is a good idea for them long term.
Oh, that's very good. Well, what would you say is the typical steps into even consulting with you folks?
So for people who are thinking about home ownership and they're thinking, oh, maybe the Hawaiʻi Homeownership Center might be a good option, but they're not sure. We do have what we call first-time homebuyer workshops that are free to the public. We have some recorded versions as well as a live session that you can go through with one of our staff. So it's a nice overview about the first-time homebuyer process in terms of the steps that they should go through in terms of preparation and the actual purchase process. It also provides information about how the Homeownership Center helps in the process too. So at least they can make a good decision on whether we're the right fit in terms of the support that they need. And for those who already know that the Homeownership Center is what they need and want, then if they go to our website, it's basically scroll down to a nice picture of a man with his son and it says join now. You press that button and it takes you through the steps.
Oh, very easy. Okay, so what are some questions one should ask about themselves when preparing to purchase a home in the next 3 to 5 years?
There's quite a few questions. I think one you've already sort of alluded to in terms of do I want to buy a home and what's my motivations? What's my why to do that? Because I would say that oftentimes the home buying process is not necessarily immediate. Sometimes it takes a little bit of perseverance. It might take a little bit of time to go through the purchase process, not necessarily because of your qualifications in terms of financing, but finding the home that you want want to buy, making that offer on the home, and going through all that process too. So I think a lot of people need to have some commitment to buying a home to navigate and persevere through that too. So I think that's one. I think also always looking at your finances too, to be clear on what is an affordable monthly payment for me. So I would say a lot of people go to the loan officer, they qualify them based on their income and their debt.
Right.
And they're probably surprised. Wow.
Yeah.
I can't believe they say that I can qualify for that amount in terms of a monthly payment. But it's really their responsibility as a borrower to make that payment. So I would say taking a look at their budget and where all of their money is going. Is everything in line with their goal of buying a home? Because there's a lot of things I think we spend on that are conveniences, nice to have, but it doesn't really matter, or it's not super important to them. So sometimes foregoing maybe eating out as much as you might be,
Right.
or there's some other things that you might consider that you could sacrifice to have a higher housing payment if that's where your priority is. I think that's another thing to take a look at in terms of what is my affordable payment, and am I willing to sacrifice anything that I'm already spending on to
Right.
make that possible.
That's great. So personal commitment and financial commitment. You did mention earlier that you also provide emotional support for people that are looking to purchase homes. Can you tell me more about that? That's interesting.
Absolutely. And
Yeah.
it's not therapy by any means. We're not like
Yes.
certified therapists or anything. But I
Right.
would say that a lot of times it's confidence
Yes.
and the education about understanding the process, what all the paperwork is that they're going to have to sign, the responsibilities of the different parties that a buyer will need to work with, I think is part of that. I think also sometimes just to have a third party that has no interest in the transaction.
Sure.
They're not financially motivated. They're not going to gain anything except for a high five and being super happy about being part of that process that the buyer went through. It's sometimes nice to be able to talk about what they're going through in terms of challenges, maybe even visiting loan officers and taking a look at what are all of these things that they gave me. I understood when they went over it at the time, but now that I'm looking at all these different offers or options that I have, I just needed somebody to talk me through it. So I think that having that unbiased support has been helpful to some buyers, just to feel confident, knowing that they understand what they're getting into and what their responsibilities are. And I think also, while we're not going to tell anyone what to do because this is their home, they're
Right.
going to be responsible for it. It's kind of nice to make sure that I understand as a buyer what I'm getting into, and having the opportunity to ask questions and just talk through some of the things that I'm going through.
Right. That's very good. Yeah, I think we all need somebody to just, be that, third perspective, right? What mortgage options are available for first-time buyers? It's common to, especially in Hawaii, to have multi-generational households. Is that something that you guide the people that you're helping in regards to, like, assumable mortgages, perhaps? Is that something that you talk to them, like different options in that case?
There's a few questions in there, and so
yes.
I'm hoping that I'll be answering it fully enough. So in terms of loan programs for first-time home buyers, the answer is yes, they do exist. No one institution necessarily provides all of what's available to a buyer. So I would say if someone's coming to the Hawaiʻi Homeownership Center, the classes are a good option to understand the general process. But the one-on-one coaching will actually dial in terms of what programs might be good for us in terms of our home buyer goal, understanding the household size as well as the household income, because that's usually a criteria for qualification for a program. So I think a lot of people might think that they don't qualify. They might think that they make too much income, or they may write themselves out of some of these resources. But you never know. Sometimes the income qualifications can vary quite a bit from program to program. In terms of multi-generational households, we have seen a few that do that in terms of buying together. It's a little more complicated because you have more than one person involved in,
Right.
their finances. Sometimes you find out that one may have credit challenges, but that's actually the highest income earner. So just kind of figuring out what's the right path for someone. The homeownership coaching can do that. And I would say for assumable mortgages, we get questions about that. It isn't always something that we necessarily bring up. I mean, it's something that it is talked about, but it's not necessarily specified in classes or coaching necessarily. But I would say the thing about assumable mortgages, it's really alluring that you can assume a loan and you can adopt this interest rate that's possibly like 3%, half of what's available to someone now. But what's happening is the borrower, the buyer, if they are assuming that loan, they're not applying for financing like most people would be. They're actually working with the lender or the loan servicer for the current homeowner, that borrower who got that loan originally. If say the purchase price is $500,000 and then the assumable loan covers $400,000, that means there's a $100,000 gap, and not everyone will have the cash to address that gap. So usually people are contacting us asking about down payment assistance to cover that gap, but normally it doesn't work that way for most of the programs that I know of that's existing today. That folks who are assuming the mortgages will have the cash to cover the shortage if there is one.
Okay. Perhaps you can tell us about first-time home buyers. There's programs for them, right? In regards to making affordable down payments or help with down payments in general?
It varies. Sometimes the first-time homebuyer program might cover a down payment. It could help with closing costs. Sometimes it's just there's other features related to less fees, so the amount of cash that they need to close that loan might be subsidized or reduced from that. So it kind of covers the gamut. And one thing I'll say about first-time homebuyer programs is you can be a first-time homebuyer more than once. So usually the definition is that you haven't owned a home in the last 3 years, and sometimes there's exceptions to that. So if you owned in the last 3 years, but you had to relinquish your homeowner, your property because of, say, a divorce, or maybe a co-borrower passed away, something like that. So sometimes you can become a first-time home buyer again.
Right. Yes. So I really like that there's different people in different stages that can come to your organization for help. Can you tell me more about the ones that are possibly struggling to stay in their homes? You guys do offer counseling towards that as well, right?
We do. We offer counseling for both homeowners and renters that are struggling with their mortgage payment, and it's at no charge. So we're hoping to help them come up with a crisis budget, identify resources if there are any to address their situation, because we certainly would want people to be able to stay in their housing situation if possible. And if not, at least have some support to navigate what are their next steps or options.
Reina, can you tell us about other costs that might come with home buying other than just mortgage or other upfront costs?
Absolutely. I think a lot of times people only think about the down payment as cash needs for the transaction, but there are also closing costs, which can be a little bit jarring in terms of there's more than just a down payment to buy a home. So the closing costs are all of the costs associated with buying the home, in terms of turning over the ownership to you. So if you're buying in a condo, all the homeowners association dues and transferring that account in your name, and a whole bunch of other stuff. And then oftentimes the lender will want to make sure that say, for example, you're going to loan me $500,000, and you're going to notice that my piggy bank is completely zeroed out. I have zero money and no cent to my name after that. You might be a little worried about, what if something happens if I can't go to work for a little bit? Am I going to still be able to make my mortgage? So to that point, oftentimes they'll want to see some saving reserves. So after the loan closes, a lot of times the lenders will want to see 2 to 3 months equivalent of what your housing payment will be. In some sort of account, to make sure that you have a little bit of cushion just in case too.
Okay, so 2 to 3 months of about mortgage cost is what you want to save up for. What is that looking like? What's the average cost of that?
It depends, so some people that have a higher income and a higher purchase price and a higher loan amount would have a higher monthly payment. And when I say housing costs, mortgage is one, so the principal and interest to pay back the loan, but oftentimes they'll also will collect a monthly amount of property taxes and interest. So when you hear PITI as the acronym, it's principal, interest, taxes, and insurance will be included. And while it doesn't get paid to the lender, the homeowners association dues will usually be taken into account in terms of what the monthly payment would be for housing, because that's definitely an obligation that the homeowner will need to pay. So when I'm talking about 2 to 3 months of equivalent housing payments, I would say all of that. So the loan payment, which usually will include taxes and insurance, as well as the homeowners association dues too.
Wow. What are the pros and cons between buying move-in ready homes and fixer-uppers?
Gosh, it depends. I think when you do a fixer-upper, some people are very handy. They might even be in construction or, have some kind of trade skills that they can put to work, or maybe they have family to do that. Some people are just naturally gifted to do that. So sometimes buying a fixer-upper could be an affordable way of getting home beautiful in terms of versus having it home beautiful when they're buying it from the get-go. Normally you're paying for that in your purchase price when it's move-in ready, no repairs are needed, versus usually it's a lower purchase price, and then maybe even after your investment of fixing up the place, maybe the aggregated total cost might be a little bit lower. But you have to kind of determine, do you have the skill set, the money, how much is it going to cost still in terms of doing the renovation. Sometimes do you have the wherewithal to do that? Some people are having a baby right before they move in. Is a fixer-upper doable for you depending on your situation? And so there's other things that we need to think about in Hawaii. Even if I'm getting my uncle and my auntie, whoever, to help me move in, fix the place, all of that, sometimes you still need to provide food and the beverages, the mahalo afterwards, some of those type of things. And then you also have to kind of take a look at, would the work be done in the time frame that you need it to be done as well too. Sometimes when you're paying for someone to do it, it's different than when you're doing it yourself.
Yes.
Yeah.
Can you tell us about the difference between a fee simple and a leasehold?
Sure. So fee simple means that you're going to own the home itself as well as the land under it. In a condo situation, I guess you would consider that as well, but it's a little bit more complicated where you're not, your unit isn't actually sitting on the land itself, but essentially you own it outright. There's no lease rent, meaning that the land that the building or the home itself is on isn't owned by someone else, which is what a leasehold property is. So if I'm buying my leasehold property, for example, if it's a house, that means that the land is owned by someone else. I'll own only the home, and then I'll have to pay lease rent on the land itself on a monthly basis. There's usually an expiration on the lease, and so that can impact whether or not, or what kind of financing you can get when you're financing the purchase. If you're paying cash, that's up to you. You don't have to worry about that. But most people, when they're buying a home, they'll need to finance it. And so taking a look at what the lease, the remainder of the lease agreement is important. And usually have someone who can talk to the loan officer in terms of what information they need to ask before considering a leasehold property. I think some of the things that other people need to understand is that when the lease agreement ends, that lease rent can be renegotiated. So you can go from $100 and then it could be $1,000. I'm just making that up. But, there's some unknowns related to that. So say in the case of a condo, what if the lease rent goes up, the homeowners association dues goes up too, and even if you have a fixed rate mortgage where the interest rate and the monthly payment for that home loan is the same, is it going to be affordable for the long term? I know some people say, I have nobody to leave the property to, I have no worries about that in terms of when the lease ends. It's going to be way after I'm here on earth. And so sometimes people kind of make those decisions based on their own personal situations, their wants for the property later on too.
Right, that's good. So since you've been with Hawaiʻi Homeownership Center for about 19 years, what would you say is the trend in the most recent years?
Trend in terms of just home buying in general?
Home buying, as well as the people that are coming to you for counseling.
It's super interesting. I would say even before COVID, informally, the staff would say we're trending younger, that we're seeing more younger people coming into the home ownership center. But when I look at the average age of people coming in, it's kind of similar to when I started. Okay. So I would say it was kind of like 37, 38 a while back when I started. And it's kind of close there. It's decreased a little bit, but it's still kind of that mid 30 range. And what I think is happening is that the spread has changed. So people might be looking younger, but also maybe even a little bit older too. So the average is actually still kind of the same. So I think in terms of trends, the interest rate being suppressed and being so low for so long at say 3%, there is definitely sticker shock that still remains. I think people are getting used to the idea of 6, maybe 7% interest, but I think a lot of people may have put their plans on hold. I think that it's also impacted possibly, although I'm not an economist or realtor, the amount of inventory that's available has also maybe pulled back as well too, that sellers can't get the purchase price that they wanted or could get when the interest rate was so much lower. The same borrowers can't qualify for the same amount, so the purchase price that they can qualify is going to be lower. So I think some people that didn't need to sell maybe took it off the market and said, I'm going to think about it for a little bit.
So since you're saying that, you do see a trend of some younger people being interested, what would you say is a good time for somebody to prepare for home buying?
Of course, I'm going to say, as soon as you can get a credit card or you can qualify for credit, but that's usually not the case. But I would say any time anyone's thinking about buying a home, even if they know that I'm not going to be able to buy today, it's not going to even be in the next 2 or 3 years, I think that it's still a good time to get educated. I meet so many people that would have made different decisions in terms of how they use their money, in terms of, what spending it versus saving it, maybe investing in it, or even how they use credit, or how many loans that they got, what they got loans for. I think that if they fast forward to the tape and they got educated about how much debt impacts their buying power when it comes to home ownership, people might have made some different decisions.
Yes. Could you talk to us about the different type of debt that would impact the process in a negative way?
So all debt actually impacts your purchase power. So when a loan officer is looking at your debt, the minimum monthly payment that you're paying on the revolving credit, which is like credit cards where, you carry a balance, it revolves, the monthly payment may change from time to time. So the minimum monthly payment is what's being considered, as well as any kind of installment debt, whether it's student debt, car loans, anything, personal loans too. So that monthly payment is going to be included as well too. I think what people often don't realize is that even if loans are deferred, like student loans, the lender will take the balance that's owed and take a percentage of that. Often it's 0.5% or 1% of the loan balance, which can be significant.
Right.
Whereas if they started paying on that loan, even if it's, income-based repayment or whatever the payment is, if they're making a payment on it, oftentimes it's smaller than taking a percentage of the balance. So I know that there's often a little bit of angst and a lot of thought that goes into that, where do I leave it in deferral and not pursue home ownership at this point? Because when you look at what the monthly payment would be calculated at, wow, that's a lot, and it does shrink down what I can qualify for. Am I ready to actually start making payments? Sometimes people look at or reach out to their loan servicer for their student loan and say, oh, that's doable. So at least you're starting to pay down on the loan as well too. So they might opt for that so they can move into home ownership. So it's always kind of putting it into context.
Okay, thank you. How can you determine the properties a first-time buyer can reasonably afford?
You get the long answer that starts off with, it depends. So, it really depends on the first-time buyer, in terms of what they can afford or qualify for. I mentioned that qualification is not always what's affordable, that I might be able to qualify for, I'm making this up, $750,000, and I look at that monthly payment, I'm thinking, I don't think, even if I skip lunch for the next, half the month, I wouldn't be able to afford that payment. I just couldn't figure out how to do that. So I need to be responsible to figure out what's affordable to me. So I can take that monthly payment and actually go to the loan officer and say, okay, let's chop this monthly payment in half. What would that equate to in terms of a loan amount, so I can back into a purchase price for there. So I think that whether you're a first-time buyer or a second-time buyer, whatever it is, you need to be able to know for yourself what is going to be affordable, because the loan officer isn't going to know if you have a child that's going to have to go to preschool, and that's a monthly payment that wouldn't show up on that credit report that I talked about. Right. Maybe you help out your parents and you have an obligation or a want to help them out with a certain amount too. So there's a lot of things in our lives that a loan officer will not know about and will not be responsible for. So I think every first-time home buyer needs to determine the monthly payment, and then they can always get help with the loan officer in terms of reverse engineering what that looks like for them.
Okay. You've mentioned that you folks also help with people that may inherit homes, and then that could be, in that case scenario for them, their first time home buying experience. Can you tell us about something? Can you elaborate on that?
Sure. I think if, say, I lived at home, or even if I was renting, and then all of a sudden I inherit a home and I'm responsible for it, I wouldn't necessarily know that there's property taxes. What is that it's due to twice a year? Homeowners insurance. I think there's a lot of things for homeowners insurance that people don't know in terms of what it covers beyond the actual structure of the home. Right. In terms of, not just the home structure itself. It can help provide for the things in the home. There's some liability protections in addition to that. What are the limitations of that as well too? What's flood insurance versus regular homeowner insurance? It can get a little bit complicated, even if you're not next to like a stream or a river or the ocean. So I think that even home maintenance, or if it's in a condo, what's a home owners association dues? What does a homeowners association, what do they do? What's my responsibilities as a homeowner? Why would I want to show up to the meetings? I think there's a lot of things that somebody that has not owned a home before could benefit from in terms of education about, you don't know what you don't know. So how can you help fill in the blanks so I can be prepared financially, but also in terms of not being surprised all the time in terms of unexpected expenses.
That's great. I also saw that you folks also help with people that have already gone through the home buying experience and then now what? So can you tell us about that?
Sure. We call it post-purchase support. So sometimes it's workshops, sometimes it's just one-on-one meetings. So I'd say some examples for post-purchase support would be, okay, I own this home. What's a will or a trust? My auntie told me that I'm supposed to get one, but I don't even know what that is. What is it? How much does it cost? And like, what does it do for me? One would be like, say, renovation. I need to fix my home. What are some of the financing options that I could use? What is a home equity line of credit? Do I need to get one right away? Same auntie said I'm supposed to get one, but I don't know why. What's a cash out refinance? Why would I want to use something like that too? So there's kind of a gamut of different things in terms of whether it's selling the home, can I keep it and keep the one I have and buy another one? If I'm going to sell it, what are some things I should consider before I list it with a realtor? So the individual coaching covers more like the personal questions, but we have a library of workshops that we've done in the past. If it's not already good scheduled for something that's happening live, that a homeowner could take advantage of.
Oh, that's so great. So what are the typical steps in planning to purchase a home? What are the steps?
Well, I'm a little
Where should I
biased.
start?
Yeah. So I would say you should start with the Hawaiʻi Homeownership Center or an organization like ours. Get educated about the purchase process. How do you get financially ready? Are there any resources available? It's always nice to have a confidential conversation about your financial situation before you actually go and see the loan officer sometimes. So you can do that for some people versus, or some people have already visited the loan officer, maybe gotten disappointing news. And so having some support to figure out, okay, this is what they told me. How do I break this down in terms of action steps in like bite-sized chunks? So that's available to you. So I think that's a good first step in terms of classes and coaching, getting ready. And then usually folks, when they're ready, like, okay, I'm financially ready. I know how much I can pay in terms of a monthly payment. I've gone through the first-time home buyer programs. I think I know where I want to shop. Get pre-qualified. I would say we normally recommend that people look for 3 or 4 quotes from different places to kind of shop around, see what's available. If they've already taken a look at what first-time home buyer programs are available, they might shop at certain places based on the programs that they're offering. And then once you get the pre-qualification, you know, okay, this is how much I qualify for, dial down to a purchase price. Now I can actually look for a real estate professional to help me look for the home that I need and want. So usually if you do some homework on what's your needs and wants of a home, that helps with the real estate professional as well. And same thing, we do recommend that people interview a few people. Sometimes the credentials are good, but you know, there's also a personality fit. Are they working with first-time buyers? Do they have experience with that? Finding the right professional that they feel comfortable with is important.
Right. Yeah.
And then that's when they get to go shopping for a home, starting to also always check in with their loan officer in between. And then once they make an offer, it's accepted, then they have to do the loan application, go through the purchase process until they get their keys. And that's a very simplified version of what they need to do.
Would you know anything about like the closing cost, you know, what that entails and what they have to prepare for?
You know, I've been told it's a conservative estimate. We usually go with 3% of the purchase price for closing costs as a guesstimate. And, you know, because there's some things that will apply to some purchases versus others. You know, if you're at a prepaid interest, you know, that is the amount of interest that they need to pay to cover their mortgage up front because usually, so say I'm gonna close on my loan this month, which is August. I actually get a month off in September, and I make my first payment in October. So depending on when certain things happen in this month, where I'm purchasing the home, I need to pay interest on the loan for that particular month. But I do get a break where I don't have to actually pay anything for that mortgage payment for 1 month, but I'm going to have to pay the month after. Yes. So prepaid insurance would be one, as well as a bunch of prepaids. So there's a bunch of things that you need to pay up front, like homeowners insurance for the year. Sometimes homeowners association dues, you need to pay a prorated amount. You need to pay for the title and escrow company that's going to be the third party, coordinating the transaction in terms of the money and the finances to make sure that the home is in your name when it's supposed to be, recording that. So those are just a few of the things that goes into closing costs. But in short, it's basically all of the costs involved with making that home yours.
Great.
Yeah.
It sounds like there's a lot of different ones that are involved in the process. So how would you say, like you said, you go through a step of getting pre-qualified and then getting a realtor. And then from there, what are the other things that one should think about, to be in their camp to get them forward?
So when you say get in their camp, you're talking about like get on the same page in terms of your home buying team, or?
Yes, exactly. Because it sounds like you're creating a team in that sense, right? Your realtor, of course, counselors too. Are there any others?
So you need to get homeowners insurance at some point. So if you're an escrow and you're going to buy a home, it will be required by the lender, but as a homeowner, you would probably want insurance as well, just in case. So if anything happens to the home, you have insurance to make it become whole again.
Right.
Certain insurance agent would be another one that you work with. Maybe not as in-depth as the realtor, as a loan officer, in terms of the amount of time and information and the back and forth. But in terms of resources and being in their camp or using them as a resource, sometimes you might consider, especially if the home looks like it's close to water, you might the lender will let you know if you need something like flood insurance. But sometimes you could do a check, like an estimation on how much the insurance will cost with the insurance agent. There's certain areas where the insurance premium is higher than some others, so you want to make sure that that's going to be affordable, and then you can provide that to the loan officer as well, so they can do a more accurate pre-qualification. The escrow officer will be another part of the team, but usually they're like the quarterback in terms of all the money, making sure that the credits and everything goes to whoever it's supposed to and all that. So
Okay, well, how about time? How much time should one give themselves into just the buying process?
Wow. It depends. So, some people are ready out the gate, financially they're ready. They just needed some information, some resources, and they find a home, they make an offer. The first offer is actually accepted, so they're off and running. So, it depends on each person. So I think in terms of the preparation process, it also will depend too on their motivation and their schedule to be able to dedicate to getting educated and ready for the process as well.
That's great. This is probably, somebody's already own a home, and, their finances has changed over time. And now you do also, your organization help with foreclosure prevention. What does that look like? How can you determine whether that's where you might be heading?
I think some people are just calling us because their financial situation changed, and they're like, I don't know, this mortgage payment is unaffordable. I'm not late yet. So they're just wanting to talk to somebody about what their options are. So that's one scenario. Some, they're already late on their payments, and so they might not have gotten a notice from the lender, or they might have. So they're calling us saying, okay, I'm late on my payments, and I'm worried about going into the foreclosure process. What are some of my options? And sometimes we've gotten documentation. They might even send that to us. We can explain what it means, and what are some of the things that they could consider for their situation. Not always is it an option to keep the home, but we certainly want to mitigate them going into how to mitigate the damages, I guess I would say. So foreclosure is like the last case. We don't want people to go into foreclosure. Selling the home is better than losing the home to foreclosure. So we definitely want to make sure that everybody can do their best to understand their options. And I would definitely say that acting sooner than later is always best. Sometimes people are calling us and their home is going to be auctioned off that week, and it's way too late for us to be able to even offer a referral in those situations.
Right. But there are different options for those that, that's great. Thank you so much. Looks like this is all the time that we have for this episode. Reina, if you can just give us your lasting, if you have any comments or if you have any lasting words for our audience.
I think I would always say, if you're considering home ownership, don't write yourself out of it. At least get the real truth in terms of what the process is, what's available to you, and make a decision from there. That, a lot of people think that they can't stay here in Hawaii. They think they're priced out of paradise, but I would like them to learn their truth for themselves first before they make that decision.
Yes, that's great. Thank you so much. I just want to thank you again for your time and, just giving us your expertise. And do you want to provide a plug for your organization?
Oh, sure. If anybody's interested, they can check us out at hihomeownership.org.
Great. Thank you. And thank you, everyone, for tuning in to today's episode of the Better Together podcast by Lōkahi Federal Credit Union. Until next time, mahalo.